QuickBooks Pro Desktop 2021. How to set up account numbers. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our sample file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're now going to be opening up the lists by going to the lists dropdown and taking a look at the chart of accounts. So within the chart of accounts, we already have the account numbers set up. We want to think through the process of setting up the chart of accounts. So there's a couple different scenarios you might have in that situation. If you're setting up a new company from scratch, then you're going to set up the new company file, and then you want to turn on the chart of accounts and see what QuickBooks provides you and see if you want to then adjust those chart of accounts to something other than what is provided. If you already have been using QuickBooks and you have never had the chart of accounts on, then of course you want to go in and turn the chart of accounts on and once again see what QuickBooks provides you with at that point in time, and think about if you want to totally redo the system and then how could we do that. We'll talk about that in a future presentation. And then you want to think about what would be the ideal list of the chart of accounts that you would have. And I'm going to, this is a list of account ranges by type, basically pulled from the QuickBooks sample file, so we could take a look at the ranges that you could consider setting up. These are somewhat standardized. Like, for example, many companies, whether they use 5 digits or not, will start off with all their asset accounts with a 1, liability accounts with a 2. Whether they have 3 digits, 4 digits, 5 digits, that's typically going to be the case. But then within that breakout, there could be some more variance. So you want to think about what's going to be your setup in general, and then you can think about how you're going to break out the accounts within it. So let's first look at a clean chart of accounts. Let's just basically create a new company file and then add the chart of accounts and see what QuickBooks provides on just a new chart of accounts types of file. And then we'll go into this sample file in more detail, and we'll take a look at this grouping of the chart of accounts here in more detail. So I'm going to just open up another company file, set up another company file, and then take a look at their chart of accounts, and that's how you would basically do it from scratch. So we go to the file dropdown. I'm just going to say new company right from here. I don't need to close this company. It'll close it automatically. Set up a new company file. I'm going to say for someone else here, and I'm going to say start the company file so that I can just rename it. I'm going to call it test 5. It's a test 5 file. And then we could choose an industry that would be relevant or close to ours. And this might be something you'd want to do if you had already been using your company file for a while, and you're not sure if you have the default settings of like the standard that at least QuickBooks would think of in your industry. So let's choose here like the general service and business based industry. So I'll just have a general, it has or let's place product, general product based business. So it's going to have product in it, cost of goods sold, and inventory then will be included. Here's going to be our chart of accounts to the right, so we can match up and see if that lines up to something that we are currently using. And then we're going to say, or what we should be using possibly, or what we might use in that industry. And then the business type, I'll say sole proprietorship, and then I'll put the email and continue. So there we have it. We're all set. I'm going to say, okay, let's X this out. We're going to X this out. And notice again, it didn't ask me where to save it, so it put it somewhere randomly on, wherever possibly I last saved my last file that I made. That's where I put it. But I'm not so concerned with where it is right now because I'm just using it for this one test thing. But just realize that whenever you make another company file, you're going to want to then look at where it was put. We'll take a look at that in a second. But in any case, we're going to go to the view dropdown and go to the open windows. We have the open windows open. If I go to the lists dropdown and open up the chart of accounts, then the fresh chart of accounts that was made, here it is. Here's our list. Notice it's in order by type. No account numbers in place yet. We have to turn the account numbers on. By default, the account numbers typically are not on. So we're going to go then to the edit dropdown, preferences down at the bottom. We're at the accounting tab up top, company preferences. We'll turn those account numbers on once again and okay. And then we'll see just what they gave us on the account number. So notice the default, they gave us basically those 5-digit account numbers. We don't have anything in cash right now. And this is basically what we mirrored this little worksheet on that'll help you to kind of break these out. But I'll go through this. This might be a little bit cleaner to see than the chart of accounts. So if I minimize this, bottom line is whether you use 5 digits, 4 digits, 3 digits, you probably don't want to use anything less than 4 digits. You typically are going to start the all asset accounts with 1s, the liability accounts with 2s, the equity accounts with 3s, and then the income accounts with a 4, and it becomes a little less clear in terms of after you get past equity, there could be deviations depending on how many account numbers you have. But in any case, 4s for the sales numbers, and then they have 5s for the cost of goods sold type of accounts, and then 6s for the expenses. And obviously there's a lot of room to go up from 6 to basically that. Now then they have 8 for other expenses down here. So that's going to be the general kind of layout. But then you want to think about within those categories, do you want some other kind of standard categorizations between the account types within, for example, assets, cash versus furniture and fixture? And notice that's a little bit more difficult to see from just a blank system that was set up for us within QuickBooks, because we don't have cash yet. So what if I add the cash account? What number should that be? It's going to be a different account type. So that's why it's useful to use the sample file to see what QuickBooks kind of does all the way out when in a company that has a lot of accounts on it. And that's basically what we did with our sample file, and then pulled this information from the sample. So for example, if I was to, let's close this company, I'm going to say File tab. I'm going to say, let's close this company. And now if you want to know where it put that company file, you can find it with the company file over, but you can also hover over it, and there's where it put it. So I don't really care, but if you want to know where it is, there it is. And then I'm going to open up the sample file back up. And that's why the sample file is going to be useful, because the sample file, if it lines up to your industry, this one may not, because it's there might be a more construction type of stuff, but it gives you a little bit more detail about possibly some more accounts that would be involved to give you more ideas of what your sub-account numbers would be. So I'm going to go to the View dropdown, open Windows, going to go to the Lists and the Chart of Accounts. And so this one having been constructed now, we have the account numbers. Now we have our checking account, which has the 1s in it, and they stop the checking account at 10.4, and then the accounts receivable 11,000, and then the undeposited funds is now in the other current assets, and so on and so forth. So you can see a little bit more detail than just assets start with 1, liabilities start with 2, and so on. So if you break this out, if you start to look through this, it looks something like this. So I'll go into, and it might be easier to see just in this kind of ranges. And this table, if you start to put a table like this together for your account types, could once again help you to visualize your accounts, because you're basically thinking about your accounts in terms of accounting equation first, assets, liability, equity, or balance sheet on top of the income statement, assets, liability, equity, then broken out between equity on the balance sheet and income statement accounts, income and expense. And then we can break them further out into the account types within each of those categories, each of the categories of balance sheet and then income statement accounts in general, which are assets, liabilities, equity, income, and expense. So, for example, within the assets, we might say we're going to go from 10,000 to 10,999. That looks like what they did basically in our example file here. That would give us a lot of room within the bank accounts. We obviously wouldn't typically have that many bank accounts. Then when you set up the bank accounts, you want to make sure that you have plenty of room within those bank accounts. Meaning, if I set up this huge range between the bank accounts, between the second account I make, I'm not going to make that 10101, like one account number down. No, I'm going to make it, they made at least a few hundred here, so that I have a whole lot of room. If I wanted to add 50 more checking accounts for whatever reason, I could put them in between here rather than having a problem. So once you get the range set up here, then you want to think about every time you make a new account, how far are you going to space them out? And with 5 account numbers, you can space them out by like hundreds oftentimes. So the accounts receivable, usually there's not much going on. So we've got 11 to 11,999. Usually there's only 1 or maybe 2 accounts receivable accounts at max, but they're a different account type, and you might have an allowance account that's going to be in there as well. And so then we've got the other current assets. Now here's a group that you could have a lot of groups into, the 12 to the 14,999. And you got like prepaid insurance and whatnot, other kind of items in the other current assets, which can be kind of more random. You could have more of them or need more of them as time passes. So you want to, again, have a lot of room to space them out once you set up the chart of accounts. Fixed assets, 15 to 17,888, probably way more room than is necessary, but you got a lot of room within there. Now notice this section, the fixed assets, if we take a look at them, you've got a lot of options on how you're going to set up the fixed assets. Notice what they did here is they set up the furniture and fixture, the vehicles, the building, the construction, and the land, and then they only have one accumulated depreciation account. That's one way you can kind of structure this, but you might also want an accumulated depreciation account related to each depreciable item. And so you could use both. I would consider then using account numbers that would be right next to each other, like if I had furniture and equipment, and then I can put right under it, or an account number that's pretty close then, maybe not right after, but pretty close in terms of the account number, 15010 or 15002 or something like that, for furniture and a fixture accumulated depreciation for the furniture and fixture. And you could also use sub-accounts in this instance. You could basically make a furniture and fixture parent account and then put the cost and the accumulated depreciation underneath it as sub-accounts, and add more detail on that way, providing you with a collapsing type of feature on the balance sheet. But that takes a lot more room as well. So those are just some options with the furniture. The furniture and fixture can be a little bit tricky. And so then we have the other assets. Usually there's a huge range here. There's usually not a whole lot in the other assets, long-term type of assets. And then the accounts payable accounts. Once again, that's probably more range than you need because there's usually only like one accounts payable account that you're going to have, but it's a different account type than other current liabilities. Credit cards, probably way more room than you need because hopefully we don't have more than a few credit cards for the business, but we might have a lot. Maybe we got people that, employees that have business cards and have a whole bunch of cards maybe or something. So we have the credit cards, and then we've got, and those are going to be broken out separately, and then all the other current liabilities, which has a fairly large range from what we're pulling from here. So there's kind of a lot of room on the other current liabilities, which may be warranted. And then we've got the long-term liabilities here. So long-term liabilities are the next categorization. Then we're going to go into equity. It's fairly standard, once again, for the liabilities to at least start with a 2. But then again, the ranges on the liabilities you got kind of a lot of room from 20,000 to 30,000 here. So there's probably more room in the liabilities that is needed. And then we've got the equity, which oftentimes most people will think of equity as 3s, right? The 3s, starting with 3s, whether it's 3,000 or 30,000, equity will typically be there, and that should be more than enough to go from 3 up to almost 4, 3,999, whatever, 3 or 4, 4 or 5 digit numbers. And then income oftentimes is fairly standard that it's going to be 4,000 or start with a 4 or 40,000, whatever, 4 numbers or 5 numbers, and then typically go up to the top. And then equity, it gets a little bit more confusing past this point in terms of cost of goods sold. If you have cost of goods sold, it would make sense to put them in the 5s, and then expenses in the 6s. Now the expenses probably is your largest category down here because that's usually when the biggest grouping of account types will be. So this should be enough range for them to have, but you could have more range for the expenses. It's nice to have all the expenses to be starting with a 6, because then again you kind of memorize that. You can, if you pick up an account and it's called like it starts as a similar name as like an asset account as it does down below, like supplies expense versus supplies the asset. You can easily start to see if you type in supplies and it starts with a 6, then you're like, oh, well, that's the expense one. If it starts with a 1, then it's going to be the asset one, right? And so it's nice to have them all grouped in one, but this is one part where you may want to, you do have more room. You could extend this out into the 7s, and then other income. You usually, you don't need this whole space for other income, because that's usually at the bottom. That's kind of income that's not normally your normal income, so you typically don't need a whole lot of space for that one. And then other expenses, again, you typically don't need a whole lot of space. This is way more than you would need. And then then we have plenty of room for the non-posting items down below, which may not be applicable to you. So this is just a general kind of setup. And again, it's pulled from basically the sample file, just pulling from the sample file to think about it. You might want to actually have this list or print out this list, make a list of for yourself, so that you can basically kind of, get the range of where the accounts will be. That helps you to visualize where the accounts are when you do basically the data input.